One baby hedge fund makes a tiny $30 billion mistake, and all of a sudden people pay attention. I mean, you've got Janet Yellen running around trying to assemble the hedge fund oversight committee, like Nick Fury trying to assemble the Avengers, right? Now all of a sudden they're paying attention when they know that hedge funds can lose money. So in this video, that's exactly what we're going to be talking about. We'll go over a little bit about what this hedge fund oversight committee could do, but let's relate it back to stocks like AMC and GameStop and the stocks that the retail investors are out there holding and waiting for the squeeze to happen. So if this sounds like something you're interested, you already know what to do. Let's get started. What's up, everybody? I'm Clay. We're already making 2021 an amazing year so far. If you haven't subscribed to the channel, make sure to click that subscribe button. We're going for 10,000 subscribers, and we're almost there. All right, so let's talk about Janet Yellen, what she's got going on with this hedge fund oversight committee, what really happened with Archegos. They're losing $30 billion. I mean, no big deal, right? It's just 30, but no, it's a big deal. Banks are paying attention. News is paying attention. Governments are paying attention. And most importantly, retail investors are paying attention because it means the payday could soon be here. So let's just briefly go over what Janet Yellen's got going on. So the latest from old Yeller is that she's out there reassembling the hedge fund oversight committee that came into place back in, I believe it was 2008 during the financial crisis. And I think really the last time they did too much was in 2016. So what are they going to do? Their main goal is to be really cracking down and looking to make hedge funds more transparent. Why do they want to make hedge funds more transparent? It all relates back to this Archegos fallout that we saw last week and $30 or $35 billion that was wiped out. Now, how did this happen? Archegos wasn't out buying stocks. Instead, they were buying things called CFDs, or contracts for difference. Now, everybody's going to try and make it sound as complicated as possible because everybody in finance likes to think that they're smart and they want to seem like they know something that somebody else doesn't. But a contract for difference is basically you're buying the difference in price. So instead of buying the actual asset, you're buying the difference in price at a future date. In doing this, since you're not buying that actual asset or the actual security, you're only buying that difference, they go out, they borrow money, and they leverage this investment. Now, when they leverage it, it basically just means that they're using credit, right? They're using borrowed money. And it was like a 10 to 20x leverage that they were out there using. And this essentially said, okay, for every dollar you spend, for every dollar in difference that the price is when the expiration date comes, you'll earn or lose, $5, $10, $20, whatever it was leveraged at that specific contract. Now, because of this, they lost, and they lost big. Now, all of these contracts for difference and these different derivatives aren't regulated and aren't reported like stock sales, and even short sales aren't reported like they should be, right? But the clear thing is that they want more transparency. They want more clarity in what these hedge funds are doing with money. Now look, when everybody's winning, nobody cares what's going on, how dirty that money is, how let's push it under the rug. If everybody's making money, excellent. As soon as they start to lose money, though, look what starts to happen, right? The Avengers get assembled. We're going to start cracking down. Why are we losing money like this? Is this going to cause a financial meltdown? Blah, blah, blah. When they lose their money, they pay attention. Now, what do you think is going to start happening? Let's relate this back to GameStop and AMC a little bit. If this hedge fund oversight committee starts to do what they're intending to do, and they uncover the transparency and they really make things more clear about what these hedge funds are doing with the funds that they're investing, what are we going to find out? We're going to find out that the numbers that we're currently seeing aren't really as legitimate as the numbers that are being reported out there, right? We know that hedge funds are shady. They've got their agenda. They want to make money. Great. I want to make money. You want to make money. Everybody wants to make money. Great. But you have to do it in a way that isn't going to rip other people off, that isn't going to destroy things if somebody finds out what you're doing. Well, guess what's going to happen? The government's going to find out what these hedge funds are doing, and it's going to be great news for us. Why? We're going to find out that these hedge funds are shorting things that they shouldn't be shorting, that their leverage is so crazy out there. And when they see that a baby hedge fund like Archegos, family wealth management, whatever it is, can go out there and cause $30 to $35 billion to be wiped out, these bigger guys, when they start realizing you're in some pretty risky assets there. What do you mean you have 10x leverage on this investment that you don't even understand? What are they going to start doing? Government regulation's going to step in. They're going to tell the banks, no, this doesn't pass your stress test. You're not going to be able to hold these assets. You can no longer loan on this. And when that happens, the margin calls start. So, I'm starting to believe that we might not even have to wait until the price goes up to a certain point for these margin calls to start occurring, right? Now, bear with me for a second here. Let's think about this. Before, when we're talking about a short squeeze, right? These hedge funds, they literally have forever. They can hold forever. There's no magic date on when the hedge fund has to cover their short positions, right? They have to be margin called, and then that's when the short squeeze starts to take place. So as the price would rise, this would further that margin call from taking place, or further it to taking place, and allow that to happen. Well, let's think here. If the hedge fund oversight committee comes in, and the hedge fund oversight committee says, yeah, these hedge funds are actually participating in some pretty risky behavior. They've got super leverage on their shorts. They're out there. They're overexposed in a certain sector. Whatever it is that they can come up with. I can name things all day long, and you can think of things all day long. But they only have to come to one determination. They have to say that the hedge fund is either over-leveraged, or the hedge fund is either in too much risk, or they didn't complete their disclosures correctly, whatever it may be. But the moment they tell the banks that the banks are at risk and the banks can't loan on these assets, that's when the margin call could take place. Now, does it even have to be an AMC or GameStop for something like this to happen? No, they could be out there messing around with shady things like these CFDs, like Archegos was doing. But because of that exposed risk out there, the banks could say, okay, it's time to cover your positions. It's time, whatever, you have to sell your positions and you have to cover your shorts because we can no longer accept this amount of risk. And I believe this could happen a lot sooner than expected if this hedge fund oversight committee, thanks to old Yeller, takes place and they do what they're intended to do. So this may be a saving grace, guys. I don't know. I'm just thinking, I'm reading through these articles and I'm really getting a little bit excited here knowing that, okay, maybe even though the government isn't directly on our side with this, even though this regulation isn't on our side, it could benefit the retail investor. Now, I want to know what you guys think. If you agree with me, if you think this is kind of far-fetched or crazy, let me know down in the comments below. But as I was reading through these articles, my wheels started spinning. I was thinking, yeah, this could be something here. We could start to see some regulation that could really start to squeeze these hedge funds and get this thing going here, and we could see the price of these shares shoot higher, because it's completely different when a hedge fund has something bought, when they're buying something and they sell it off, price goes down. But these hedge funds, they've already sold AMC, they've already sold GameStop, so what they have to do is cover these positions, and that's why the price will rise. That's what everybody's waiting for, is this short squeeze to happen, and I'm beginning to believe that it could happen sooner than expected. So let me know if you agree down in the comments below. If you guys got AMC, if you've got GameStop in your portfolios, let us see those diamond hands in the comments below if you're excited to see this squeeze happen, and hopefully see it happen sooner than expected. If you haven't made your first investment yet, or you're thinking about trading brokerage accounts, there's a link in the description below for Webull. Oh my gosh, it is easy to set up your account. And if you deposit $100, you're going to get a couple free stocks just for doing so. And guess what? They're giving away free shares of AMC right now, so you can go ahead and snag yourself a free share of AMC just for signing up with that Webull account and moving on forward from there with that $100 deposit. Now guys, if that subscribe button is still red, you know what to do. Click on that subscribe button, join the channel, and become a bro. We're growing our portfolios together, and we're here every single day. Now, if you want to share this video, it's very important that you do, because this could really help the channel, but it could also really help a lot of people out there understand what's going on with the short squeeze, understand what's going on with these hedge funds, and maybe somebody needs it explained in a way that they can understand. I'm not out here, I'm not, going through super technical chart analysis or using crazy words that nobody understands and it's hard to comprehend. Look, we're keeping it simple. We want everybody to know what's going on. We want you to be informed and really talk in a way that people can understand. That's what we're all about here. We're growing together, not only our portfolios, but we're growing in our education as well. So until the next time, I hope that each and every one of you have an awesome day.